All right, what's up, everybody? Welcome back to another episode of Inside Bitcoin Spaces with Jason and Andrew.
What's up, Jason?
What's up? Today is Friday, June 26th, 2026. Bitcoin block height 955,506. USD price 59,914 US pieces of paper. Andrew, how you doing?
Good, sir. And yourself?
Doing good, doing good. So the Bitcoin price continues to go down, stay down around 60K. When will this bear market end?
Yeah, the word I was talking about this with a fellow Bitcoiner here in Atlanta, and the word capitulation came into the discussion. It's like, are these bear markets seem to be punctuated by, like, at some point that the market just like capitulates. He was telling me about some of his friends that are more into the Ethereum, and Ethereum's really taking a beating, and a lot of prominent names in the Ethereum community are like, I'm out. I sold all my Ethereum. So, and I'm sure it's going to drive some weaker hands in the Bitcoin space to, like, just be frustrated and leave. I'm hanging in here. I'm choosing to continue to build on things. I mean, we got Space Protocol, something worth building on. And I think there's a lot of other projects. So I don't see anything slowing down from that perspective. But yeah, it really does test your mettle, right? When you have these prolonged bear markets. And now everybody's talking, oh, the 4-year cycle is back. It's
Yeah.
like it's like we were hearing like a couple of weeks ago. It's like, the 4-year cycle doesn't really apply anymore. It's like whenever you hear the words like this time it's different, whenever you hear that phrase, doesn't matter. It's like alarm bell should always go off. It's like, whenever people say this time it's different, you should always like say, well, let's really look at this and decide if it really is different.
Yeah.
Maybe it's just similar, but not completely different. So
Yeah.
yeah.
Well, there's only 21 million Bitcoin, so you could use this time to accumulate more. And if you think Bitcoin's going to go back to its all-time high of 126K and you're trying to get fiat, you could double your fiat right there when it goes back. So Bitcoin's half off right now.
Yeah, you can look at it that way. I think that's the optimistic way to look at it.
Yeah.
Yeah, I was listening to some other podcasts, and it's interesting how the threats to Bitcoin kind of move around. So it becomes like I'm hearing things like, well, if the NIP 110 thing sort of like causes a split fork, then people are going to lose confidence and that the value is going to go down. I've also heard arguments that if you look at the core developers and the subset of like true people that make changes and that can, with a few people, make changes to the code and then follow where they're getting paid and who's paying them and how those people are getting paid, the follow the money sort of trick, right? That it kind of casts some doubt, and it's like, well, is this a way to control Bitcoin by like in a way corrupting or influencing the core development teams, right? So another implementation of Bitcoin could be useful in like having alternatives, but yeah, that's a pretty hard lift. I know that there's a project to like break out a lot of Bitcoin's functionality into a library that is kind of separate from the main implementation, but that project is, while admirable, is like I think still a long ways off and proving to be quite a challenge. So we'll see where things go. But at the end of the day, you kind of step back. It's like, man, it just feels like FUD. It feels like whoever doesn't like Bitcoin or doesn't like the idea of Bitcoin existing is certainly trying to find ways to like cast doubt on Bitcoin itself.
Yeah.
And if you look at it from that perspective, then maybe that's a testament to like the fact that it's really a challenge to a lot of these, sovereign central bank sort of power structures. So maybe we're seeing like last gas thrashing of the existing fiat system.
Let's go a little
Maybe
deeper on
that's a
that.
little bit hopeful, but
Let's go a little deeper on that. So there's 6 people, right? As I understand it, that could change the Bitcoin code. So
yeah,
obviously, if you were an attacker, that's a great place to go. Bitcoin Core. And who are these 6 individuals that could change the code? Let's pay them, influence them, threaten them in some way to persuade them to change the code to do these things. And we have the whole knots thing popping up. Core put a change in. Knots people didn't like it. They created their own thing. But now with knots, I believe there's only one person, Luke, who could change the code on that end. So I think what happens with the Bitcoin, there's only 6 people that can change the code, one person that can change the code. It's the nodes, right, that determine how consensus is going to stay. The miners maybe, right? So if someone changes the code, that's going to cause a chain split because the majority of the people aren't going to agree with that, and it's going to cause a fork.
Yeah, I was listening to a podcast that was getting down into all the details of this, and it's too much to get into here. But you're right. It's like there's really 2 classes of users. There's participants, I should say, in the Bitcoin network, the miners, and they have a certain amount of power and influence and say over what changes to the code happen. And for anything to happen going forward, they have to create a proposal and then signal their acceptance of the proposal. And the threshold for that has been lowered to like 55% to do a new thing, which is like for this proposal, which is kind of like crazy low. Normally it's like they want to see like 95%. So it's already kind of feeling shady in a lot of ways. And then again, as you manage, there's then there's people that run the nodes. So the node network. And if, you could probably just like not upgrade your software. It's like the code, like when you think about it, right? All the development for Bitcoin could just stop. Like all the people that know everything about it could just stop doing anything. And we could just run with it the way it is now, right? Not make any changes or improvements at all. And I mean, it runs across thousands and tens of thousands of nodes now and does its thing, TikTok next block. So it's like, is there really that much need to change things? I think they talk about Bitcoin ossification, but in my mind, that isn't necessarily a bad thing. So yeah, it's kind of what's going on, what's in the discussion, sort of loops right now, and we'll see where it goes. My feeling is I hope this kind of fades away as it's not just, nothing really needs to change. I think these are kind of overreactions largely. And even people that seem to like get on behind the idea initially, kind of on further scrutiny of, hey, this introduces an element of like deciding what is and what isn't, then a lot of folks reversed their opinion about it, which I think is a healthy kind of discussion to have. So
this might be a great test for Bitcoin right now. It's under attack. Whether you agree with the NOT side, the core side, BIP 110, whatever, your perspective is somebody's attacking Bitcoin. Either BIP 110 people are attacking it, core people are attacking it. So is Bitcoin vulnerable to this? Is this a fatal flaw in Bitcoin? I guess we're going to find out how this all plays out. And I'm sure that's affecting the USD price. A lot of uncertainty. People are scared. Sure. They're not sure what's going on. So maybe we'll get out of it, and then we'll let all this play out, see how it ends, and then we'll determine if we want to get back in. We had something similar in, I think it was 2016, where we had the block size wars. Bitcoin was down to like $800, $500, whatever it is, below $1,000. Block size wars happened. Bitcoin forked And in January 2017, it was $900. Boom, it ended the year at like $19,000 once all the dust settled. So maybe we're seeing something similar to that right now.
Yeah, potentially. Even if you kind of go back to the 4-year cycle, the kind of psychology behind it, um, if that's the case, then and I thought we went below the 200 moving average. Is that right?
Yeah, we
Uh,
did. I think it was like
which does,
61K.
which like there's only been very few times when that's actually happened, and it always kind of precedes a move up in the price. But that's like, again, that's by the this is what it's always done going forward. I think in my mind, I think other things probably going to influence it more than just the standard psychology. One thing that I'm hearing more Bitcoiners say is uh, that the price is being manipulated to like hold it at this level. That natural forces should be pushing it up, like the macroeconomic turbulence and stuff and change. It should be like pushing up gold and Bitcoin as as assets, and the new, or the realization is starting to come in. It's like, well, wait a second, this is starting to behave like gold has been behaving. And a lot of the gold bug sort of theory is that there's a lot of paper gold being futures contracts on the underlying asset, and that's a way that you can swing a lot of paper gold for a lot less resource, a lot less money, um, to keep the price in one direction or the other. And that now that we have ETFs, now that we have futures ETFs, spot ETFs, we've got Bitcoin in a component of like 5 different strategy financial products. And it's in pension funds, it's in sovereign wealth places, that all of these things have an influence on the price because it can be um, kind of artificially manipulated a bit. We talk about some serious like outflows from the ETFs. I noticed that's been kind of in the news. And the theory has been, well, everybody wanted to free up their money so they could invest in SpaceX. And now SpaceX, since it's been IPO'd, is like up and back down to its IPO price almost. I'm not sure what it is today, but it's like the euphoria over like making a quick buck with SpaceX seems to be, kind of seen its little initial bump, which is typical for an IPO. I also saw that just this morning that OpenAI is thinking about delaying their IPO into next year. Suddenly, it's like these darling IPOs that everybody's kind of waiting for is like, oh, well, if that one's not until next year and maybe the Anthropic one still happens in the fall, people aren't going to like just have their money sitting around. They're going to want to put it somewhere. Maybe they put it back into Bitcoin. Yeah, who knows?
Yeah, people will realize eventually what we have going on now and what we've had going on for years now since the internet came out is we're putting things online. We're transferring things into digital form because it's super convenient. So we're making things digital. But the problem is when we make things digital, a lot of times you need an intermediary, you need a middleman to keep control and keep track of all that. That's exactly what Bitcoin invented, digital self-custody. So once people start figuring that out, then obviously the price will follow.
Yeah, that's the theory.
Yeah. All right, let's talk about Spaces Protocol. So what's new with Spaces Protocol? What have you been seeing on the GitHub? And any new developments going on with Spaces Protocol?
Yeah, I saw, I maybe mentioned this, I'll bring this up a little bit. I think we mentioned this a little bit last time. Let's see, hang on a sec. So this is the main website. Notice that, and just for full disclosure, we're not, Jason and I aren't part of the core team. But we're in touch with them. We try to help facilitate, what their efforts are, help to test things, and we keep an eye on what's going on. just because we're interested in the topic. We think this project's got a lot of merit, and we believe in it. So one thing I've noticed is that that they've really done some work on the website, and that they've really kind of helped to kind of reformat and add a lot of content here to kind of tell the story of Spaces Protocol. So if you kind of scroll down, you'll see that there's little animations or little code stubs. These are the different things that have to happen in the order and why and how it goes. And then some of the qualities about it, the permissionlessness, etc. Little animations here about how things get created, and how the Merkle trees and the off-chain stuff all happens. And then you keep scrolling down and you get to like, how do you take things and add more attributes? Once you have a name, how do you enhance it so that it's more useful for you in the cert relay system? And then finally you get into like, well, how do you go off-chain? Or, well, though that's off-chain, but then there's the function of going on-chain, right? Which you can take a subname and you can take it on-chain, which in my mind is the ultimate expression of self-sovereignty for the name. And actually, this was the thing I really wanted to impress when I presented this at the Bitcoin conference. It's like, I wanted people to see that you could have full sovereign ownership of a name. And to do that, you need so when you're in the mode, when the top level name is in the mode of being operated by an operator, what we call, then that entity, they won the auction. It's their name, it's their property, the top level name. So if you want to give away and or sell, a subname under that, then you can do so. And then the person who owns that name can decide if they want to like ask. You can do it, I guess, if you want to, do it as a gratis, or you could ask them to maybe pay you to like create an on-chain, what's called a num, which represents that subspace. Mm-hmm. So the reason I mention this is because I was looking around in the GitHub repo, and everybody can do this. This is it's all public. If you go to GitHub Spaces Protocol, you can see that here's a push request from the primary one of the primary developers. And I was looking at this, and it says previously that subspaces would go on chain, would stay there forever, increasing Bitcoin's UTXO set. So this actually makes a subtle change, making sure that once you create a num that represents that subspace, that you can continue to use it in a way that makes sense, right? So it says, a num represents a subspace. So, and only the operator can create these. But once they're created, you have to create it with the person who holds the subspace in mind. So you need to know their public key, their what we call script pub key. And you then create this transaction that binds to that subspace. Well, that's great, but then it's static. Like it's stuck on chain in whatever state it is. There is a place on chain where you can add extra information. And that extra information can be any number of things. It can be like, maybe it's a website. It's like, if you want to resolve to a website address, your name, then this is one way to express that. But in order to create that change, you need to recreate the num, or a transaction that replaces the one that you already have. And that means spending the prior UTXO that represents that on-chain subspace. And then, and also you might want to give or send it or sell it to someone else. So what's a good example? So say I created one, say my name was somebody famous, right? And I created one with my name, and I used it for a while, but then the famous persons that found out about Spaces like really wanted that name, and they say, look, I know it's your name, but it's my name too. So maybe it's like Mick Jagger or something like that, right? And so Mick it Jagger, and my name was Michael Jagger, and is like, and I had, but my friends call me Mick, and anyway, so I would say, okay, I'll sell it to you for maybe you negotiate a price, but once you do that, you need a way to transfer the ownership that you had to that new person. So the real Mick Jagger has to then create a key pair to receive it, which is the public side of that's the script, what we call the script pub key. And then I now need to create a transaction that effectively transfers it to him. And after that, I have no more control of it. It's his. He's now responsible for it, right? And that's one use case. And I think that's a pretty powerful, because what's the value of property if you can't dispose of it at your own will, right? That's part of the property. That's part of the property. In fact, Michael Saylor, if you listen to some of his podcasts, he'll sometimes say, I could just decide that, all my Bitcoin that I personally, hold, whatever that is. He never says, but it's like, you got to expect it's a good stack. It's like, I might just decide to burn it all upon my death. Part of my ritual when I go is to get burned and have all my Bitcoin burned. Or I could just decide not to tell anybody what the public keys are, or the private keys, to control that. And just by virtue of me like not dealing with it, it becomes a set of coins that cannot be, I can't say cannot be spent, will not be spent if the private keys aren't understood somewhere. And so that effectively reduces the functional operational set of Bitcoin that's spendable, right? So it kind of takes it off the market. So we talk about 21 million, but then when you really kind of talk about, well, if I wanted to go, say I wanted to go buy all the Bitcoin, if everybody that holds Bitcoin was willing to send it and I wanted to buy it all up, how much could I actually buy? And the answer is, people theorize something more like, probably more like, 19 and a half or 18 and a half, because there's like a bunch of early Satoshi coins that everybody wants to talk about. There's other things that have known to be spent to unspendable addresses. So that 21 million, while the theoretical cap is actually functionally smaller somewhat. So anytime, and like with the Spaces protocol, right? It's like anytime you auction or buy a name, the proceeds go to a burn address. So we're burning Bitcoin just by, using Spaces protocol. Now, relatively small amount, but it's real. It's not insignificant. And real things with real value have real costs. So,
well, it doesn't go to a burn address though, right? It burns in op return.
Well, the proceeds go to a burn address. Yeah.
Oh, so it does create an extra UTXO then.
Oh no, I'm talking about in the auction phase.
Oh, okay,
Like
in the
the top
auction.
level name in the auction phase. Yeah. If we go to the Explorer here.
Because I thought that was one of the selling features of Spaces, where it does not create more UTXOs to burn the Bitcoin. It burns them in op return.
Well, any transaction, yeah. I mean, there is ways to like, you do kind of tie it up with elements of a transaction. But what I was talking about was this top level name auction proceeds. Like here, it's 1.5 BTC has been burned. So the auction process, people bid on a name, have like, this Bitcoin isn't coming back.
Right.
Right?
Yeah, it's gone.
It's gone. Right. So it's not a million Bitcoin, but it is a little bit, and I think it's a trade-off. So, but yeah, the other aspect of that is rotation of keys, right? there's times when you want to rotate the key set that controls an asset, even if you're not giving up possession to it. So that's actually a pretty important thing. And if you study Nostr, this is one of the main complaints of Nostr. Um, is that well, what happens if my private key gets compromised? Then suddenly somebody else can pose as me on Nostr, and you're right. So I think it's kind of there's been strategies to kind of mitigate that. Something called Froster is kind of somewhat of a solution, but I think it's one of the things that needs to be kind of addressed in the future for that. It's less important, I think, here, but I think you need, again, if you're going to have something and claim that it's completely sovereign, you need to give people the ability to dispose of it, even if it's to give it to nobody or sell it to nobody or destroy it. Like, that is part of your right to your property. It's like you can buy a house. You want to buy a house, and if you want to burn it down, it's like it's your obligate. It's your right to burn it down, right? I mean, if I could buy a gold brick, if I want to, like, throw it off the bridge of the Titanic or something, and into the ocean, that's my right to do so. It's my property.
Yeah, that makes sense. Now, does this mean that whenever you do a renew or a transfer or you sell a space, that the UTXO is the same? It doesn't create a new UTXO?
Yeah, it creates a new UTXO and it spends the prior one.
Okay, so then what is this nums thing do then? Because it sounds to me that it's reducing the amount of UTXOs.
No, it's just it's not reducing them because it's creating one as it's replacing the other one. So it's not, but it's not growing the set in total. So, and I think that was one of the design considerations that have kind of changed a little bit. And this is probably why the team we haven't quite finalized a full, like, announcement for the blockchain, or the project, because they want to kind of, like, work through some of these last little details.
Well,
And so
how's it not adding to the UTXO set if it's creating a new UTXO?
because it's spending the prior one as it's creating the new one.
So what happens to the prior one? It just no longer exists? I mean, isn't it there in the blockchain history?
It's there in the blockchain, but it's spent. So it's like no longer, and the rule about anything on the blockchain is, like, if it's spent, then whoever was the prior owner has no more control over it. It's like you can't spend it again. That's the double spend problem. That's one of the things the Bitcoin blockchain prevented and guarantees. So yeah, the history of what happened exists. You can still you can get all this information off the blockchain by inspecting it, but only those things that have unspent UTXOs. I mean, that's the definition of UTXO, is unspent transaction output. It's like only those things are valid, are real. Everything else that's been spent is, it's done. So while this represents the property rights of a subname, you're effectively spending it. You're basically selling it to yourself, if you want to say that. You're spending it and you're creating a new representation of it in the same transaction. So there's no losing it in the middle, right? It is going somewhere. Now, you could say I had one of these things and I wanted to give it to you, Jit, right? So, like, and you say, okay, here's my address to send it to. Okay, great. And say, like, I put in the transaction, I paste it in there, and I don't paste the last character, and then I look and I say, oh, it's an E or something at the end of the address, so I'll just type it. But then you accidentally hit the D key and you don't realize it instead of the E key. So it's a valid address, and you think it's the one that goes to Jason. So you hit the button to turn it to, commit it. And because it's the wrong address, it didn't get sent to Jason. It's like gone. Unless somebody haphazardly in the future has the key, happens to build the same key set and happens to find it out there, and has it would actually be gone and completely gone. It's not like I can go back to the operator and get it reissued. It is gone. So, you can make mistakes. It's possible. So, but yeah, that's, I thought that's interesting, and I think when we talk about and try to think about how we evangelize, how we talk about spaces and the functionality, I think we're going to really want to, kind of use it to kind of give to people, right? To like, here, have a sub name, use it over here, use it in this chat engine, use it over here, but I need to, give it to you in order for you to experience it. Kind of like, when you tell Bitcoiners, like, just if you're not sure if you'll understand Bitcoin, just buy a little, just buy a tiny bit, and take self-custody. And like that action itself is a great way to really get people committed to thinking about it. Even if they're doubtful, it's a way to kind of break the ice, and then they're committed, right? And also, like, they can see something on the news. Oh, Bitcoin's up 100%. It's like, oh, I wonder what my Bitcoin's worth now. And they'll go on. It's like, oh, it's like doubled. Like, wow, I put $10 in and now it's $20. It's like, maybe I should look at this Bitcoin a little further. Maybe I should understand it better. Same thing with spaces. It's like, oh, everybody's talking about spaces. Oh, that's right. Jason gave me a space once. Maybe I'll try to do something else with it. Or, once people have something, then it's a lot easier to refer to it. So I think it's, we need to, as a community, need to be thinking about how do we leverage the function and feature of Spaces protocol to promote and get more people excited about it. Because just like when I first read the white paper in 2010, I'm like, this is an awesome idea if anybody cares.
Right.
And until somebody cares, until I see like transactions, goods and services, up to pizza day, from 0 to pizza day, it had no value or no realized value. It had kind of this unrealized value, but as soon as you attached it something in the physical world, then it had some value that could be measured against real world. So same sort of thing. I mean, there's been other namespace protocols that have come and gone and, have not worked out for one reason or another. I think this one has got a lot of merit, and I believe in the project. So.
Yeah, so do I. So let me just understand this, though. So top level spaces always replace the previous UTXO, right? So they never contributed to the UTXO bloat.
Top level spaces are represented by UTXOs.
Right,
yes.
But if a bid happens on it, it replaces the other one. So the previous UTXO is spent.
During the bidding process, yes.
Okay.
So during the bidding process, if you get outbid, part of your being outbid by somebody else, there's the return that they're spending more money than you spent before. That's the whole mechanism being outbid, right? And while they are now the high bidder, part of their transaction, their bid transaction goes back to you to refund you your bid, right? That's why and of course, minus the transaction fee, right? So even bidding back and forth, if you if you bid one Satoshi higher, well, you're spending more than one Satoshi to bid one Satoshi higher, right?
Right.
So, yeah, it's like, I think those bids transactions probably around 300 to 400 Satoshis and transaction fees. So yeah, but it's symbolic, right? So that's a kind of a similar case to this, where when you spend one transaction, you get a new one, a new UTXO. When you spend one UTXO, you create a new UTXO to represent it, and the information around what it represents is stored in the op return, and also the structure of the transaction.
Yeah,
So
this is
yeah, but
great.
once you've won the top level bidding process and then do the final registration phase, then that registration transaction is your proof that you own it completely.
Yeah, this is great. So this is just another example of great design with Spaces Protocol that respects Bitcoin, that's working with Bitcoin, not to harm Bitcoin. You know, a lot of people say spam, arbitrary data, put a lot of negatives behind that when you're trying to do stuff with Bitcoin. But I can understand that perspective because, yeah, some people are going to put a lot of junk and crap on Bitcoin. But at the same time, there's a lot of useful things that can be put on Bitcoin. And by designing it like this, the way Buffer's doing with Spaces Protocol, he keeps coming up with these ideas like this, not to bloat the UTXO set, continuously improving Spaces Protocol, making it better for Bitcoin, cleaner for Bitcoin. And one of the biggest problems and hurdles I face when I'm telling people about Spaces Protocol is, well, that's just a system, a protocol. Who cares? Everyone has to buy into it. Everyone has to believe it. I could just put my name in op return data. I could just do this. Someone else could just create a system. All these things could happen. Who cares? Why don't we just trust DNS? It doesn't matter. So I think one of the ways to get people to adopt Spaces is with clean design like this. Show everyone, hey, you really are sovereign. Look at the design of this protocol. It's minimal on-chain footprint. All these steps that Buffer's taken to design Spaces Protocol in a way that respects Bitcoin, and people will come around, they will learn that, they will see that, and hopefully they will adopt it because it's the cleanest solution. It's robust. It has all these features to it, and it has a tiny little footprint on Bitcoin.
Yeah. Yeah. If you remember when we had Mike Carson, that we interviewed him for our show, uh, he talks about how that, he had come from the legacy of domain registration and names and running a registry and this, and so he kind of knew the world before as it exists now, and he makes an important point. It's like he really wanted this to be like kind of like really push the edge of kind of cypherpunky coolness, like really use the technology to its fullest. And the hope is that the technical people would really appreciate that first, and then later adopters, the broader public, doesn't have to know all the details. They just have to know that it works and that trust it, and it's got value. So I mean, it's kind of like, a lot of people, they just want to buy an ETF. They've heard about Bitcoin. They want to, like, ride along with it. So they're not going to be, setting up a Coinbase account, moving money into it, making a purchase, transferring the Bitcoin to a self, custodial wallet. They don't want to be bothered with that, but they've heard about it and they don't want to miss out. So they do the easiest thing that they can, and that's fine. And I really appreciate that we have ETFs, that we have, like, now retirement kind of vehicles that have components of Bitcoin that people can, at least participate to some limited extent. It's like they're not completely, in fiat world. So we'll see what goes. And I got a lot of confidence that this is going to succeed, but it takes time. It takes time to kind of get the word out, and kind of, and for us, honestly, the builders on this stuff, we have to kind of continue building functionality. I mean, once the protocol kind of, and I think we're there, once it's stabilized, it's like we need browsers that understand it. We need, wallets that understand it. We need social media platforms that understand it. We talked about the SIPs and NIPs and BIPs last time. So that needs to be implemented and adopted across multiple pieces of software. So, the journey is just kind of, I hate when everybody's like, oh, we're just getting started. Yeah, but we kind of are just getting started in a lot of ways with this. But I think, when we're announced, when we're out there publicly trying to promote it, and are confident it's everything we want it to be, then I think that's when the real fun starts.
Yeah, the pushback from Bitcoiners that use NIP05. First we can understand the need for human readable names. Everyone can understand the need for that. We have long strings of data, Nostr, npubs, Bitcoin, public addresses. It'll be a lot easier. We could send a text message at Andrew, at Jason, and send some Bitcoin or sign some sort of Nostr event or even a website, things like that. So we can understand
Right.
that. But this one of the solutions that's popular on Nostr is NIP05. And the people that use NIP05, they're comfortable somehow with a JSON file on a web server somewhere, whether they own the server or not. Most times they don't own the server, so that's even more egregious. But let's say they even do own the server. The server, it still relies on a domain name that's centralized. So they have all these third-party intermediaries, centralized points of failure that they're relying on. And trying to explain Spaces protocol to these Bitcoiners is still difficult, though, because I get Bitcoiners are just guarded. We don't trust anything. Why would I trust the new system? It's such a hard hurdle to overcome.
Well, I think the pitch that you can make to people that are familiar with Bitcoin have gotten somewhere in their understanding where they've come across this term counterparty risk, right? And you can say, look, if you believe in Bitcoin, then you believe in the mantra that whatever you do, you want to minimize or completely eliminate counterparties, right? And which goes to like understanding what a counterparty is. So it's like, well, I mean, in money transactions, that's a bank, right? It's like I have to trust that the bank is there to do, my stuff, to do my banking, right? And if the bank changes its rules, then I'm affected. Or if the bank goes away, then I'm effective. Or if I don't have a bank, then I can't even get started, right? So that's a counterparty. When you buy a stock, you're relying on, your broker. That's a counterparty. You're relying on the exchange. That's a counterparty. You're relying on, whoever does the settlement of the stock transfer. That's a counterparty. So all of these are counterparties, and they're all either institutions that don't have necessarily your best interests in mind, or they're people that are fallible, right? So when you understand Bitcoin, you understand more and more that removing any component of counterparty is very important to your own sovereignty. And that involves things like running your own node. It's like, if I trust that somebody else's node to get my transactions done, then I'm relying on that node to act properly, right? That's a counterparty. That is a reliance. So how do I get rid of that? Well, you get rid of that by running your own node inside your own network so that you're not leaking your desires, your transactions in the general public, that in a way that is traceable back to you. You just interact with your local node, and then it just does the things nodes do, which is to propagate all of these things. And your transactions get mixed in with everybody else's, and there's no way to really kind of discern them. So I think if you can kind of say to a Bitcoiner, it's like, you believe that mantra, right? And then they're like, yeah. So like, why not take that same desire, that same understanding, and apply it to other things? Apply it to websites, apply it to messaging and social media, apply it to the security of your own phone calls, right? It's like, when I pick up the phone, how do I know, A, that I can get to the other party, or B, that nobody's listening? I mean, do you have assurance that that's the case?
No.
No, you don't. So like, And then there's things like, well, Signal is a messaging client and uses encryption as a default. So if I'm using Signal, then I am, removing a lot of those intermediary counterparts. Yeah, but Signal is one company and one product. So there's a company that's involved. And maybe they can't break your encryption, or maybe they have a back door in there, and they actually can. So it's like, are you looking at all the code? Are you getting in the Signal encryption and inspecting it yourself? Probably not. So it's hard, really hard, to remove all counterparty risk. So, but that doesn't mean it's not worth striving for. And I think in the realms of like social media and web content and what you believe online, it's like, that's going to be more and more important. I would say also that, look at a world where privacy is getting more and more difficult to maintain. We got things like KYC and like age verification, and government saying things like, well, we're going to like make sure you have to like identify yourself in order to use a VPN, or maybe we need to like you to verify who you are before you even use your own internet connection that you pay for. It's like, that's pretty scary. So it's like we need to be building things that kind of counteract that, some alternate systems that don't rely on all these counterparties. And this is exactly what Spaces is.
Yeah, I think it'll take some time because people just say why spaces, why spaces, why spaces. They don't want to change. But hopefully, as spaces continues to grow, people will see the value just as we do.
Yep. And maybe, and I've thought about this too, maybe in initial phases, it's kind of like, well, this is like becomes like a secret space that only the people that are on the ends that understand it, know about it, kind of can congregate. That kind of is public but kind of private at the same time. Like there's you can imagine, I mean, I don't like to use the word dark web because there's so much negative connotation to it, but in a way it could be like kind of a private like space in the internet. You could build out a set of things that are only addressable they're only reachable through Spaces protocol resolution and no other way. And you can say, well, this is just, a website or a social media sort of thing that only people with Spaces identities can access. So keep out a lot of the spammers, maybe the bots. I don't know, maybe bots start picking up Spaces names. We'll have to see where this goes.
Yeah. People that don't want to be stopped, people that want self-sovereignty, they will adopt Spaces. So we'll just keep it going and see where it is. So I know we're up against the hour here. We did have a few more topics to discuss, but we could just shelf that for next week if you're all right with that.
Yeah. Actually, let's talk about the Walsh comment quick.
Okay, yeah, let's talk about that. So next topic, the new Federal Reserve Chair Kevin Warsh held his first meeting where he said inflation is currently at 2.9%, and he's not worried about the 0.9%. So he's strongly implying that the Fed is now comfortable moving their target from 2% up to 2.9%. So we have US dollar inflation steadily increasing, now up to 2.9%, while Bitcoin exists in parallel, and everyone can see 21 million coins, neutral money.
Yeah, a couple things about this. One is, why even 2%? I mean, it's like, why do we have to like live in a world where our money is constantly, and like everybody seems to be okay with it, getting eroded at 2% a year. Now 2.9, okay, you could go back and say, well, in Biden it was up to like 9. It's like, and now it's 2, only 2. But people don't understand this is cumulative and this is like constantly eroding. It could be 1%, it could be 0.5%, and it's still eroding your value. I think Michael Saylor talks about like this, even like at 2%, your bank balance has a half-life of 40 years. Like you can't, even if you put $100,000 in the bank and wait 30, 40 years, it can buy like half as much stuff. It should be able to buy exactly the same amount of stuff at minimum. And like they talk about these 2.9, so they're kind of breaking their rule about this 2%. This is a self-imposed rule. These are all abstract things. And it's like, oh, we'll let it run hot, we'll let it run cool. It's like it's all just manipulation. And it's like, why can't we run at -2 for a while? Let's do that.
Yeah.
Like, can we talk about running at -2? Yeah, let's do -10 for a year and undo a lot of the Biden era like inflation rate. It's like nobody talks about that. That's not even conceivable. So yeah, it's kind of like, it feels like they're focusing all on the interest rate kind of mandate, and they're kind of forgetting about the employment mandate. Like it seems like the employment mandate is kind of like a second fiddle to the interest rate mandate. And they even talk about like, well, it's the Fed even has a third sort of unspecified mandate, and that is to keep the market going, to encourage market activity, which is not their job. But anyway, the thing also that I thought that was interesting about this conference, and this was the first one with the new chair here, is that he was very specific to say that they're not giving any more forward guidance. They're not going to tell you what they're thinking and what they're planning. In fact, they have this thing that they've historically kind of put out called the dot plot. You'll hear about this in the news, right? And it is like, their own, each of the Fed chair makes an estimation where they think that the interest rate should go. And they published this time, but the new chair, Walsh, whatever it's his name is kind of hard to pronounce. Walsh said, I'm not putting my dot on there. I'm not going to put a dot on there, which is again saying he's not going to telegraph his thoughts or intentions. And, we just saw the passing of Alan Greenspan at 100. That was in the news this week. And love him or hate him, he had this way of talking and saying things that were completely convolutional, that were like very hard to understand. They started calling it Fed speak. It was like, and he would say something at one of these conference meetings, and everybody would be like, what the hell did he mean by saying that? And like people would like, analysts would like just dig into like all these things about what's he talking about. But he said like irrational exuberance once, and like the market took like a 20% dive. So it's kind of crazy. That was the .com kind of craze time. But it was like, the people watch what these people say very closely. It's almost like its own industry. But now they're like saying, we're not gonna tell you anymore what we're thinking. We're just gonna do what, so you'll find out later. So I think the market has to digest that whole kind of new way of the new normal, I guess, in that respect. And we'll see if they stick with it or not.
Yeah.
But it's an interesting shift there.
That whole thing is so silly, right? We as humans hang on these other humans' every word to determine what's going to happen with money, right? The money that they create for free, that we all go to work for and trade our time and energy to earn this money. Now we're relying on these people to give us forward guidance. Masters, what are you going to do with the money that we work for, that you create for free? They say all these words, we interpret it with our wizardry and all this nonsense. Bitcoin cuts all that out. Proof of work, verifiable. We don't need any wizards or high priests or masters to tell us what they're going to do with the money. We look at the blockchain. Simple as that.
Yeah, that's right. Good points. And I think that's a good place to wrap it this week.
Yep. Great
And
show. Good talking with you. Thanks for watching, everybody.
See y'all next time.
Have a good one.